You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 9th day of March, 2026. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That one is reserved for members only and those taking their 1-week free trial. If you've not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through the simple steps to sign up for the trial. We'll get your indicators up and indicating today. Your trial will officially start tomorrow, and it'll run all the way through next Monday. 5 consecutive trading days. The weekends do not count against you, and there's no credit card required. Not only do you gain access to the live training room when you take the trial, that's 2 hours every trading day, but you gain access to everything else we do, the other 22 hours of the day. You see, we go to work Sunday night at 6 p.m. Eastern and work literally around the clock until Friday afternoon at 5 p.m. Eastern. So when you take the trial, we're going to treat you like you were already a member, a bona fide passport holder, so that at the end of your trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Now, there's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email, there's a link, so at 12 noon Eastern, just click the link in the email, and it automatically logs you into our platform. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel. It's easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. And as I mentioned, we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting. So whether you join via the link you get in the email, or whether you join via the YouTube channel, if you want to have access to the question box right away, make sure you use the link that you receive in the email. Now, currently there's over 2,900 daily episodes archived for your educational and viewing pleasure. Obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips because it allows you to see how we've evolved over all these years, day by day by day. YouTube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. As I mentioned, Michael will join us about 1 p.m. Eastern, or an hour into the broadcast if you're watching after the fact. He'll give us a recap of what happened this morning in the live training room and do a little live trading as time and the markets permit. But we'll start where we always do with the afternoon broadcast, and that's our daily devotional. A topic that we're on right now, I've been on it for almost 2 weeks, and we got about another 2 weeks to go. Topic is, God, where are you? Today's scripture is Luke 2, verses 8 through 12. And I'm sharing from the NIV translation. And there were shepherds living out in the fields nearby, keeping watch over their flocks at night. An angel of the Lord appeared to them, and the glory of the Lord shone around them, and they were terrified. But the angel said to them, "Do not be afraid. I bring you good news that will cause great joy for all the people. Today, in the town of David, a Savior has been born to you. He is the Messiah, the Lord. This will be a sign to you. You'll find a baby wrapped in cloths and lying in a manger." Again, that was Luke 2, verses 8 through 12. Who would you choose to receive the most important announcement in human history? Religious leaders, political dignitaries, wealthy merchants? God chose none of these. Instead, he chose shepherds. These men were society's outcasts, considered unclean and unreliable witnesses, excluded from respectable society. Their ritual uncleanliness prevented them from participating in temple worship. Yet, ironically, they were caring for lambs that might be used for temple sacrifice. Working the night shift during lambing season, they were as far from the centers of power and prestige as possible. While these forgotten men tended their flocks, heaven suddenly invaded earth. An angel of the Lord appeared to them, and the glory of the Lord shone around them. God chose the marginalized for his first announcement, not the religious establishment, but working class men doing their ordinary jobs. The angel's message was extraordinary. Do not be afraid. I bring you good news that will cause great joy for all the people. Today, in the town of David, a Savior has been born to you. He is the Messiah, the Lord. Universal good news delivered to local outcasts. The sign, a baby in a manger, the most humble beginning imaginable. The shepherd's response was immediate. Let's go to Bethlehem and see this thing that has happened. Luke 2:15. They became the first evangelists of the gospel, spreading the word about what they had witnessed. In Luke 2:20, the shepherds returned, glorifying and praising God for all the things they had heard and seen. This divine choice set the tone for Jesus' entire ministry. Its first announcement was to society's rejects, not the religious elite. God values the humble and overlooked. The gospel breaks down social barriers from the very beginning. God is still using ordinary people for extraordinary announcements. Your background doesn't disqualify you from being his messenger. Like those shepherds, you may be exactly who God wants to use to share the good news with others. From fields to the world, the gospel spreads through unlikely messengers like me and like you. Let's pray. Heavenly Father, thank you for the good news of great joy that came with the birth of our Savior, Jesus Christ. Just as the shepherds received the message with wonder, help us receive your gift with humble and joyful hearts. Let the light of Christ fill our lives and lead us in peace. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen, and happy Monday. Let me give you the numbers from around the world. Then we'll go to the news, then we'll go to the charts. Starting here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 374 points. The NASDAQ is down 9. S&P 500 down 28. The Russell 2000, our man in the street, down 29 points, well over 1%. In the commodity basket, crude oil up $5.80, trading 96.73 last. That's a gain of almost 6.5%. Gold down $47.60, trading 51.1270 last. That's a drop of almost 1%. Silver up 57 cents, trading 84.88 last. In the Asian markets at the close, the Nikkei dropped 2,892 points. That's over 5%. Shanghai dropped 27. Hang Seng fell 348, almost 1.5%. And in the European markets at the close, FTSE down 40, the DAX down 170, the CAC down 75, almost 1%. So that gave us a red day in Asia. It was a red day for the UK. And at the moment, it's a red Radio Monday here in the US of A. Let's take a look at the news. Iran's 88-member Assembly of Experts selected Khomeini's son as the country's next supreme leader. His father, who was killed in an Israeli strike last month, Israel and the U.S. have indicated they won't accept this fellow as the next leader. It will just be more of the same. The update comes after Israeli strikes hit Iranian oil depots near Tehran, sending clouds of black smoke over the city. The attacks mark the first on Iran's energy infrastructure in what is now the 10-day war, and come as average gas prices in the U.S. are up 14% to $3.41 per gallon as of this writing, with prices varying from state to state. Iranian President Masoud Pezeshkian has meanwhile sought to de-escalate conflict with the country's Gulf neighbors, saying, "We won't strike you guys again," as they continue to strike them. It's the whole point. You can't trust anything they say. The Pentagon has separately confirmed a 7th U.S. service member was killed 1 week after being wounded by an Iranian airstrike in Saudi Arabia. Our thoughts and prayers are with the family and friends of this brave serviceman and all of our brave men and women who put their lives on the line to protect the peace, the freedom of speech that so many of us just take for granted. The 54th Iditarod sled dog race kicked off yesterday with hundreds of dogs amassing at the ceremonial start in downtown Anchorage, Alaska, before moving north to the official starting line. 34 mushers will compete, with the race expected to end in mid-March. The race dates back to 1973, with co-founders Dorothy Page and Joe Reddington Sr. seeking to honor the state's mushing tradition. The race also honors Alaska's Iditarod Trail, a 938-mile freight and mail route forged in 1908 that was later instrumental in responding to a diphtheria outbreak. Though the first race, 1,000 miles, lasted 20 days, dogs today have become faster, reaching the finish line in Nome in roughly 10 days versus 20. There are 12 to 16 dogs per sled to start. As some dogs exit due to injury, mushers must finish with at least 5. A Norwegian billionaire will join the fray in this year's race in an honorary expedition capacity. For the honor, he is contributing to the race's purse, lifting the yield from $57,000 to $80,000. Hey, big spender. Don't hurt yourself taking your wallet out of your pocket. Turning to Michigan, at least 4 people were killed and 12 others wounded after powerful tornadoes touched down in southwest Michigan on Friday, the deadliest such storm in the state since 1980. 2 others were killed in Oklahoma as severe weather swept across the plains and Midwest. Our prayer are with those families and friends. The intensity of the storm caught forecasters by surprise. Michigan averages about 15 tornadoes per year. Fewer than 1 occurs in March, and those tend to be relatively weak. An initial assessment placed the strongest of the Michigan tornadoes at EF3, with peak winds of at least 150 miles per hour. While Michigan sits outside of Tornado Alley, the central and southeastern U.S. states most prone to these twisters, recent data suggests tornado activity has shifted eastward over the past few decades. Turning to Wall Street, U.S. stocks tumbled today, and there's been some recovery. We'll look at that when we get to the charts. The gap lower open last night was just huge. But at last glance, we were higher than we were when we opened last night, but still lower than where we closed on Friday. From Bloomberg, U.S. stocks are facing a growing risk of a sharp sell-off this year as the escalating war in Iran hurts global markets, according to veteran strategist Ed Yardeni, updating his outlook for what he describes as fast-moving times. Yardeni has raised the probability of a market meltdown to 35% for the rest of the year, up from 20% previously. At the same time, he slashed the odds of a melt up, a rally driven more by investor enthusiasm than underlying fundamentals, to just 5%. Previously, he had that pegged at 20%. They're all blaming it on the crude. Amazon's Zoox unveiled new service areas to test its robotaxi offerings, the latest move in the race for robotaxi dominance. Zoox announced today that it is bringing its autonomous vehicle testing program to Dallas and Phoenix, expanding its footprint to 10 U.S. markets. The move marks one of the company's most geographically ambitious steps since Amazon acquired the startup for $1.3 billion back in 2020. Zoox will deploy a small number of retrofitted Toyota Highlander SUVs, equipped with its full sensor suite, but staffed with a human safety driver to map Dallas and Phoenix before any fully autonomous testing begins. Sorry, hold on for me one moment. And we're back. Zoox said the two cities are designed to stress test the company's self-driving technology due to their sprawling street grids and varied weather. And it's a funny looking little box. Looks nothing like the Waymos. Zoox crossed 1 million autonomous miles driven last year and has served more than 300,000 riders across its San Francisco and Las Vegas operations. It currently offers free public rides in parts of both cities, around the Strip in Las Vegas, and in select San Francisco neighborhoods, and plans to begin charging for rides in those markets this year. Wow, you can get a free ride right now. They buried the lead on that one. Oil prices crossed $110 per barrel for the first time since the early months of the Russian invasion of Ukraine back in 2022. with no signs of slowing down in what has been the fastest oil rally since the 1980s. We'll take a look at that chart here in just a few minutes. Turning to Capitol Hill, the public approves of President Donald Trump's handling of the conflict in Iran at roughly the same level as his overall job performance, according to a new poll. We don't put a whole lot of stock in these polls, but hey, it's the news, so. A national NBC News poll reports 41% of the public approves of Trump's handling of the situation in Iran, and 54% disapprove. Well, he could have just erased it. Would that have made you happier? NBC News, in partnership with Hart Research Associates and Public Onion Strategies, conducted the survey of 1,000 registered voters from February 27th to March 3rd. It has a 3.1% margin of error. The United States and Israel began strikes on Iran February 28th, meaning the poll should capture Americans' early impressions of the conflict. The poll would not capture the potential effects on public opinion of developments since March 3rd, and today's March 9th, such as the selection of a new supreme leader, the continued rise in oil prices, or the announcement of the death of a 7th U.S. service member. It also was conducted before Trump's call for Iran's unconditional surrender on Friday. This level of support for Trump in Iran tracks with his overall approval rating in the NBC survey, which of course we know is not biased in any way whatsoever. America's mainstream media, speaking of, ignored Director of National Intelligence Tulsi Gabbard's detailed warning about the growing threat of Islamization in the U.S., which was issued a few days before Christmas last year during a Turning Point USA event. Conservative media like the Daily Caller devoted significant space to the speech, but a search of the New York Times website, for example, turned up no references to the former Democratic Congresswoman's remarks, despite the fact that it included this stunningly direct admonition. And I quote, "There is a threat to our freedom that is not often talked about enough, and it is the greatest near and long-term threat to both our freedom and our security, and that is the threat of Islamist ideology. It is propagated by people who not only do not believe in freedom, their fundamental ideology is antithetical to the foundation that we find in our Constitution and Bill of Rights, which is that our Creator endowed us with inalienable rights, the right to life, liberty, and the pursuit of happiness." Gabbard pointed to a conference earlier in 2025, which the Council on American Islamic Relations issued a call to action to use the American legal and political systems to overthrow the United States government. This Islamist ideology is a direct threat to our freedom because, at its core, it is a political ideology that seeks to create a global caliphate that governs here in the U.S., in America, in your town, threatening Western civilization, governance by Sharia law. I don't think that's what our forefathers had in mind. Sharia law is the civil and religious law prescribed by the Islamic religion's Quran to regulate public and private life. Among much else, Sharia sanctions husbands treating wives as slaves, justifies Islamic men raping non-Islamic women, requires the death penalty for those who identify as homosexual, death by stoning for adulterers, and forces non-Muslims to convert or face death by beheading. And friend, if you don't think that's coming to your town, unless somebody stands up and does something about it, well, God bless you. That's all I can say. You're leading some kind of under the rock existence. It's a very real thing. All right, let's take a look at Logic 247. Now, last week we ended up, I don't think this is the finalized version, but it's pretty close. I'll bring up the other one a little later. Last week, I know we issued 59 total alerts, 5 never triggered. At the time of the recap Friday morning, we were waiting on 11. I believe that changed. I'll find it in a minute. Which gave us 43 actionable alerts, of which 3 or 7% would have been stopped out based simply on market structure. It's a very simple process we teach all of our passport holders. We're currently now in week 397. Over the last 397 weeks, we've issued over 21,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based simply on market structure and a simple process we teach all of our passport holders. Since the markets opened last night at 6 p.m. Eastern, we've issued a total of 19 alerts. Valerie did the recap this morning at 6:30 a.m. Eastern. At the time she did the recap, we were still waiting on the outcome of 8 of those 19 alerts issued. That gave us 11 actionable alerts, of which so far nothing has stopped out. Now, the purpose of the logic alerts is to help you learn how to read a chart. Every logic alert has an entry price, long or short, then an initial target designed to help you get your goal for the day. In most cases, additional targets, and then a final trade to target. If you never actually trade a logic alert, use them for the purpose intended, so that when you look at that chart and see chaos, it becomes clarity. When you learn how to read the chart, and remember, there's no words, no sentences, no paragraphs, no punctuation, a nonverbal language. But to become a successful trader, you're going to have to learn to read the chart. You can spend years. You can do all kinds of different things. You can spend money on all kinds of indicators, oscillators, algorithms, so forth and so on. But at the end of the day, if you can't read the chart, you're flying blind. That's the purpose of the logic alerts. Now, 397 weeks is a long time, over 7.5 years. But many years before we had Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different. They're different in a lot of different ways. Number one, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. But the CTAs, the concierge trade alerts, they're different in a whole lot of ways. But for the purpose of this discussion, I'll just say they don't come out around the clock. They're typically posted 5 minutes ahead of the Globex open. But because we knew there was the potential for there to be gaps last night and a lot of volatility because of all the things happening on the world stage, I did it in two parts last night. First, I issued a preliminary at 1:41 yesterday afternoon, Eastern. Now, as you can see, typically the CTAs come out 5 minutes ahead of the Globex open. And because futures trade around the clock with just a 1-hour break each day from 5 p.m. to 6 p.m. Eastern, we don't see a lot of gaps with the futures market. Stocks, you see gaps practically every day because once the U.S. stock market closes and the Asian stock market's open, then the European stock market's open. So by the time Wall Street reopens the following day, price is going to have moved up or moved down. And so the opening print when Wall Street opens, there's your gap. So futures, we typically only see the gap Sunday night after the futures market has actually been closed for a day and a half. And in earnings season, sometimes we'll see a gap when the Globex market opens at 6 p.m. Eastern. If one of the big names has published their earnings, held a conference call, and there's either a huge hit or a miss. So anyway, last night, instead of 5 minutes ahead of the open, 10 minutes after the open. The Monday session we're in right now began last night at 6 p.m. Eastern. So 10 minutes after the open, all of our traders had all of these targets. The S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. Again, it's typically 5 minutes before the Globex open, 5:55 p.m. Eastern, last night, and the previous Sunday night. It was just after, 10 minutes after the market opened. Okay. All right. So now we can go to the charts, and we'll start with the bellwether, where we always do the S&P 500 E-mini futures. Now, okay, here's where we closed on Friday. Okay, we closed off the low of the session right at the bottom of that red body on that candle from Friday. Then we opened right here at the bottom of the green body. That's where we opened last night. And then we dropped and put in a double bottom with the low of November 21st of last year. Okay, look at the horizontal line on the cursor. It's definitely a double bottom. Okay. Now, we bounced back. I got a closing price here on the ES Friday, 67.40. And we got a high today of 67.34 1/4. So it looks like we're about 5 3/4 points from closing that gap. You'll be able to see it better when we go to the 30-minute chart. Now, price always reverts to the mean. Doesn't matter what you're trading or what methodology you're using to trade it. It's kind of like gravity. It just is. In our case, the green line, price always reverts to the mean. In our case, the mean is green, right here to the green line. And as you can see, price always comes back to it. If we're above it, it comes back to it. If we're below it, it comes back to it. And then when we get above it, you see above it, we're bullish and expect higher prices. Below it, we're bearish and expect lower prices. Higher prices, lower prices, higher prices. Pretty simple. But the key is price always reverts to the mean. So in our case, we refer to that as a pullback to the BBC. Just stands for bull bear cross. Bullish above the green line, bearish below the green line. Pretty simple. So we're right at the high of the session. So good chance we'll see that gap close today. But I want to point out that if we go all the way back over here, October of last year to November of last year, okay, that's a 1 month drop. And I've been pointing this out almost every day. Yeah, we've gone up, we've gone down, and up and down since this October, November. The October high, November low. But what have we done since then? We've basically gone sideways with a bias to the downside. I think Friday we had 13 consecutive days where we were below or touching the BBC. And when you've been below and you get a run like this and you're still touching, that's still the pullback holding, leg retracement. And so Friday we did not touch the BBC, and that's important. We opened and closed below the BBC. See, as long as it's touching, the pullback's holding. But now we've got an open and close below the BBC, and that's definitely bearish. Okay. Down here you see the 24% Fib retracement. We haven't had a 24% Fib retracement on the daily chart in about a year or more. How we close today will, as always, be very important. We may find ourselves over the next couple days going from regular fibs to reverse fibs, and from regular fib extensions to reverse fib extensions. Now, when we hit this 24% fib retracement, that should be good for a bounce. That's if we hit it. We got a double bottom in place right now. Okay, you see that? The low of November 21st and the low of today, which began last night at 6 p.m. Eastern. If we continue higher, we got the black step line, the 24% fib extension, red and falling, the daily BBC, and then the 38% fib extension. So we got a lot of layers of resistance. Should we take out at any point today, if we drop below the opening price right here from last night, if price should, in other words, if institutional traders aren't comfortable carrying these positions, and they're the ones who move price, if they're not comfortable carrying this home overnight, we could drop pretty quick. And if we were to start dropping, where would we expect potential support? Now notice that where we opened last night, that's basically where we closed on November 21st. See the top of the green body, bottom of the green body, okay? And you got the double bottom, okay? Then you got the 24% fib extension. Under normal market conditions, anytime you hit a fib on the daily chart, it's usually good for a nice bounce in an uptrend. In a downtrend, you're going to get a bounce too, but in the opposite direction. So we'll see how we close, and let's say we make it all the way back up to the step line. Don't get carried away, because remember, we've officially gone from bullish to bearish. Actually, we did that back here. We had a candle open and close below the BBC here. That began the bearish stance. And now it's looking even more bearish, even though we're printing a green candle. Now, all of the alerts are created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame we chose years ago. The vertical line separates today, Monday, which began last night at 6 p.m. Eastern, right there. Back here's Friday, back here's Thursday. So the vertical lines separate the days. The horizontal lines are the weekly trading zones, okay? They're published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, boy, it looks like we closed that gap. What do we got? A high here, 67.40. Now we won't be able to get that exact high off of this candle because of that vertical line. But if I just, yeah, looks like we just closed it. Anyway, we can see where we're headed. Now, right here, you should expect potential resistance at 67.52, 67.68, 67.80, and then the CTA long target, and then last week's zone. These are last week's zones you're looking at, because any alert that's created on a Sunday night is based on last week's zones. Why? Because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. Now that the new zones have been published, all alerts that go out for the remainder of this week, both logic and CTA, will be based on the new zones that were published this morning for our members. In fact, on tomorrow's broadcast, you'll see this week's zones on my chart. This was the lowest weekly trading zone last week, okay? And the gap lower open right at that zone. And then we hit the short target, got a little bounce, and we traded below the short target. Notice right here on the way down, you got the black step line and red and falling, trading parallel to each other. But right here, things change. The step line crosses from the left side to the right side of red and falling. When that happens, we expect a retracement to the BBC. As you can see right there, red and falling turn right here to blue and climbing. That's bearish, that's bullish. So we consolidated at the BBC for 1, 2, 3, 4, 5, 6 30-minute candles. And then right here, 5 a.m. Eastern, we caught a bounce and we found resistance at last week's weekly trading zone. When price trades up to a zone, we expect resistance until proven otherwise. When price drops to a zone, we expect support until proven otherwise. We've published the zones every Monday for our members for over 16 years. Now, when the market finds resistance, it's going to go look for support. Remember, the pullback holds more often than it doesn't. Support sends the market to resistance. Resistance sends us back to support. Support sends us back to resistance. And now we're in price discovery mode. Pretty sure we closed that gap, but we'll see. Now keep in mind this area right here. That's your next area for, should be significant resistance. It's where blue turned to red, and you can see it's crossing the black step line right there. You see that? So again, watch for that. If we get up there, let's give it a number. To be conservative, we'll call it 67.52. Okay. All right, on the Dow. This was the gap lower open last night. Hit the short target to the tick. Caught a bounce. Came back down, just like on the ES. Hit the short target a second time. But we didn't really trade below it. However, the step line crossed, and true to form, price pulled back to the BBC. Red and falling turned to blue and climbing. Now we know the pullback holds more often than not. But when you got this much blue and climbing chasing price, that's a time when price has a better chance of trading through the BBC. Even though the pullback holds more often than not, like here and here and here and here and here, we know that eventually it's going to trade through. And it did, right here. So we get a leg and a retracement, and a leg and a retracement. Again, the pullback holds. And that was last week's lowest zone. We're now above it. And we need to get this last 30-minute candle from Friday. It closed green. So we need to get to the top of that green candle to officially close the gap. Right there. On the Russell. Here's the gap lower open. We hit the short target, consolidated. Notice the black step line crosses. Red and falling turns to blue and climbing. We run up to the BBC, the pullback holds. Sends us back down to the short target. Then we consolidate at the BBC, and we finally catch a break to the upside. But we don't take out that opening price. Not yet, not there. The black step line crosses. We get a pullback to the BBC. The pullback holds. And that sends us right up to last week's lowest weekly trading zone. And we need to get right up to here to officially close the gap on the Russell. On the NQ, as you can see, on Friday, the pullback held, and it held, and it held, and it held, and it held. As I said, it holds more often than not, but eventually it will trade through. So then we had the gap lower open last night. We hit the short target. We traded below last week's lowest weekly zone. Red and falling turned to blue and climbing. We consolidated at the BBC, and then right here, we made our move. Now you can go look over here and see why price ran into trouble there. Resistance always sends us back to support, back to resistance. When blue and climbing gets directly above price, that becomes potential resistance. Back to support, and then we run all the way up to the zone. We can see that we have definitely filled the gap on the NQ. And price is currently trying to work its way up to the next weekly trading. And again, these are the zones that were published last Monday at 6:15 a.m. Eastern. You'll see this week's zones on my charts today. But all alerts that go out on Sunday night are based on the previous week's zones. That's how it's been for 16 and a half years. Crude gapped as well last night, but it gapped to the upside. In fact, it gapped above $100, right about here. Took us all the way up to the long target. Put in a high at 119.48. Blue and climbing, turned to red and falling. So back we come down to the BBC, and this time we get below the BBC. We get below it, and then we get a retracement, and the pullback holds. Now this one held for a minute. We hit the BBC and we caught a little bounce, but then it quickly failed, all within that 1 30-minute period. And we bounced up to the BBC and the pullback held. So we get another leg, and then we pull up again, and the pullback holds, and the pullback holds. And the pullback holds, and the pullback holds, and the pullback holds. And overhead, we've got the black step line, potential resistance, red and falling, potential resistance, and of course the 30-minute BBC, potential resistance. Should we get through that BBC, then this high right here, and then this bearish cross right here, are both areas you should expect to be good resistance. Gold. Here's where we opened last night. Made a run at the long target. Didn't get there. Dropped through the BBC. Bounced. Right here, blue and climbing, turned to red and falling. And by the second 30-minute candle, we hit the short target. We then traded well below. Now, on your own chart, go look left, figure out why. Okay. Support sends the market looking for resistance, which it found at the zone from last week, 51.45/46. Resistance sends us back to support at the BBC. So we get a leg and a retracement, and we've just basically been consolidating above and below and above and below. Red and falling has turned to blue and climbing. So that is an opportunity. Now, when you trade through a short target, okay, like this, a CTA short target, often the underside will become resistance, as it did there, and is right now. We need to break above that, take out this high, in order for us to have a run at this high and the zone 51.45/46. But again, members already have the new zones. Last, silver. This was the opening candle last night. And by 7:30, we had made it to the short target. We spiked it, dropped it a little bit below it. Go look left so you can see why. Then we consolidated at the BBC. Got a leg and a retracement, the leg and a retracement. Pullback held, and it held, and it held, and it held. And now we're above the BBC, we're above blue and climbing, and we're above the step line. The next potential resistance is right there, and then the long target. One last look at the daily. Okay. Remember, Friday's closing price is not the wick, but the bottom of that red body right there. And Michael is here, so he's going to give us a recap of everything that happened this morning in the live training room, and then do a little live trading as time and the markets permit. Then I'll come back and wrap things up with our good word for the day.
All right. Here we go.
All right, looks good.
Okay. Bring this up. Looks good. Oops, let's slide that up. This. Okay. Just add another row on there for today. There we go. All right, here we go. Good afternoon, everyone. Today is Monday, the 9th day of March, 2026. Now, if you have not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for this trial. Just click on that purple button, and when you do, it will bring you to, well, this registration page right here. On this page, all we ask for is your name, your email, and your phone number. Down at the bottom, give us your TradingIQ login ID. Hit the register button. Once you do that, we'll know that you took the free trial, and we'll get your indicators indicating on your desktop for you, so you can follow along during the trial, and even when you're not in there with us in the morning. Okay. Now, we had a pretty good morning this morning. We did have some stop outs, but it was a good morning overall. Yeah. All right. So if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures at the bottom. Today, the 7th day of March. That's not right. Today, the 9th day of March. The 9th day of March. Oops, that's not right either. Let's do it this way. Yeah. There you go. Today, the 9th day of March. We're up 211 ticks on the NQ, 146 ticks on the Russell, 119 ticks on the YM, and 5 on the ES. That got us to $2,442.50 with one contract this morning. Today it took 7 minutes and 2 trades to get to the goal for the day. At that point, we're at $2,050. So we took a total of 41 trades and 39 more trades after that. And we stopped out 6 times. So on the day, we're averaging 85.37% of our trades were break even or better. So far this month, that's a pretty good number, 88%. We normally average around 85. Anyway, on the month now, we're at $9,672 a contract over 6 trading days, averaging $1,612 per contract per 2-hour trading day. And on the year, we're at $53,925 over 43 trading days, averaging $1,254 per contract per 2-hour trading day. Now, if you were to quit trading when you got the goal for the day and you were to add 1 contract per month, so far this year, you would have only had to work 5 hours. If you did everything exactly like I did, you would only had to work 5 hours and you'd be up to $11,317. All right, you'd be on your 3rd contract right now, in month number 3, and you'd be up $11,317, averaging $2,233 per contract. Okay, pretty good money if you can get it. Now, let's go into the trades that we took and didn't take. We had a fair amount of trades today. Fewest looks like the fewest on the YM, and equal number on the NQ and the Russell, it looks like. So we'll start out with the Russell. Go back to the beginning of time today. Wow, not a lot of bars on 19 range. Okay, so our very first trade on the Russell was here, and we picked up 5 ticks on that one. Then 12 there, we went to 17. Then yeah, I believe I made an error. But we went from 17 to 26, and then from 26. Okay, I didn't. I went from 26 down to 1, and then it went from 1 to 18, and then 18 to 46, and then 46 to 91. Then we had some big trades, 91 to 118. Oh, that was not a big one there. That was a good one. 118 to 123. 123 to 136, and then we had one more somewhere for 10 ticks to get us 146, and that is what we ended it on the Russell today. Now, our last session in here, we ended up with negative value on Friday. We ended up not getting back to the goal for the day. I mean, not getting back positive. So let's see if we can fix that today. So far, we don't have any trades in here, but I am looking, scouting, looking for opportunities, and we don't have any yet. All right, good. All right, let's get into the YM right now then. Okay, on the YM, get that back. Okay. Okay, and on the YM, let's get back in here. Okay, so on the YM, I had my DOM messed up on the YM, and I had to set up for a 9 range to begin with. I ended up with 1 tick on the first trade, and then 40 ticks on the second one. That got us to 41, and then then we had another big trade that got us to 84, and then we stopped out. I don't know where it was. We had another trade that was 84. And then we stopped out, and that brought us down to 59. Then we stopped out again, and that brought us down to 34. And then we went to 74. And from 74, we went to 111, to 111. We went to 114 somewhere, and then we stopped out again, down to 89. Then we went to 99, and then 119. And that was it on the YM for us this morning. It looks like there was another trade there that we missed, and there's not a trade here right now. Okay, but on the Russell and on the YM, since we went to the 19 range at the end of the week last week, we got a lot bigger trades on those. Stop outs are bigger too, the 25 tick stop outs, but the winning trades are larger as well. Now the ES, we stayed on the 7 range on the ES, and you just saw the stop outs that we had in there. All the way back to the beginning. There being this many bars on the ES this morning. Okay. All right, so the first trade here on the ES, we picked up 2 ticks. Then moving along all the way through here, we ended up with a break even, another break even, and then we went to 6 ticks. And then we had our break even. Then we had a big trade. We went from 6 to 14 ticks, and then we stopped out and we went down to 4 ticks, and then we had a break even and we stopped out again, and we went down to -6 ticks. We had a +2 to get us to -4, and then we had a +9. That was our biggest trade of the day right there to get us to +5. And that is where we ended it on the ES today. All right. So the ES, well, it's the only one we didn't go to a larger time frame on. And because we went from a 19 to a 39 here, went from 9 to 19 on both of these. We stuck with the 7 on the ES, so trades are still smaller. Now a down close here on the NQ right now is going to be a short. Okay, so you can look for that. The down close over here on the S a minute ago was a short right back in here, so you can jump on that now if you want to, or you can just skip it. But I am going to go here, this control, and all the way back. Here. On the NQ, let's get to the beginning of it. Here we go. Our first trade on the NQ, we picked up 41 ticks. Okay, the next trade after that, we went from 41 to 55, so we got 6 ticks. Then we had a big trade after that. Went from 55 to 108, then 108 to 156, then 156 to 166, then a break even, then 166 to, actually, I think this was the break even. Actually, we lost 3 ticks on that break even. It should have given us plus 10, but we ended up with minus 3, went to 160. We had 10 ticks there to 173, then 10 more ticks to 183. Then we went to 211, and I'm sorry, 201, and then 211 is how it ended up. Okay, and we didn't end up with a down close over here for the trade earlier. And so that brings us to the end of it all. Right? On the NQ, we ended up with 211. Right now, there's no trade here, there's no trade here, there's no trade here, and there's no trade here. So we just have to wait. All right, so that's how we wrapped it up for the morning session. We ended up with 211 on the NQ, 146 on the Russell, 119 on the YM, 5 on the ES with $2,442.50 per contract. So 7 minutes and 2 trades to get to the goal for the day. That we're up $2,050. We took a total of 41 trades. So on the month, we're at 96.72, and on the year, we are at 53,925. Okay, 53,925 on the year. All right. So, if you haven't taken the free trial, let me go through that part again. If you haven't taken the free trial, go here to mytradingiq.com and click on the purple button. Once you click on that, no credit card required. It's going to bring the registration page just to fill it out. All right, let's get back in here and start trading. Let me see if there were any questions for me in here. I don't think there were. There were not. No questions for me yet. So right now, we need an up close to get this into the overbought, and then a down close to give us a trade. On the ES, on the YM, same thing. On the NQ, same thing. And the Russell's so close to flipping the YBR right here, but it hasn't done it. This could actually be a long trade right here on the Russell. I don't like it at all because it's so close to the YBR, but a long trade there on the Russell. 8.4, I think. 8.6. So this is what it looks like. I don't like it at all, but this is what it looks like. Okay, it just gave it to me and it just filled me right there at 8.6. Now after 10 ticks in profit, stop will go to plus 5. Should go to plus 5. I got the DOM set up right. That was my problem earlier today. I don't like this trade, this long trade right here, because it's so close to the YBR and everything else is in the red. But it's trade, so take the trades that come. And I don't want to be able to say, I want to be able to say, you know, I just take the trades that come because I don't know any better. That's what I want to be able to say. We don't have any trades giving us shorts yet on these other markets, and they all have to close up to give us anything. So they could all close up and continue going up. Okay, none of them are in the overbought. They're all in the red, but none of them are in the overbought. So we don't have trades yet. So everything's going kind of sideways. It's just these all flip the YBR. If this goes down anymore, it's going to flip the YBR too. If it hits the YBR, it's going to flip it on the close of this bar, whether this bar closes up or down. So it just flipped it. Okay, but that doesn't mean it's not going to work. It's going to go all the way up here to flip it back. That would give us some profit on the trade. A lot of profit on the trade, actually. All right, so the ES is in the overbought, and down close on the S would be a short on the S right now. The NQ did not close up. The YM did not close up. So people often ask, if you get into a situation like this, like we're in right now, where the dynamics of this trade setup have changed while you're in it, do you just get out? And I say, just let it ride. Right? We stopped out. Just let it ride and do what you would do with a normal trade setup. Okay, let it ride itself out. The ES is working right now. The ES just went to break even. Now we stopped out minus 25 on that one. Just picked up 2 on the ES. And the NQ actually gave us a trade right here too. Okay, so I'll put all that down in a minute here. But here's the NQ, that's at minus, plus 10, plus 14. Okay. So let's go put it in the Wednesday tool. This one right here. Right. So on the NQ, we had 14. On the Russell, we had minus 25. And on the ES, we had 2. Okay. So far, put that down to here. We're at minus 300 overall. 3 trades, 1 stop out, and in this we have 14 minutes. We'll see if it used up a minute. Copy that, and to there. And this will be 61. Let's see. 3, no. 70, yeah, that's right. Okay, and this becomes a 61. All right, and that's where we stand right now. Let's make that green and that green. I'm gonna start out with that look. All right, any questions? Anyone about anything? The ES did continue down. I have to give me just a couple of ticks. The NQ also continued down. Yes, it was this one. I have to give me 14 ticks. And the Russell continued down after stopping us up. It's all good. All right, so we are almost back up here and there and there. We're in the red on everything, so we're looking for shorting opportunities now. We're down a little bit on the session after that stop out on the Russell. But we still have plenty of time. We could have 10 trades between now and the end of the session. All right. So I'll say this again while I'm waiting for stuff to come together here. If you haven't taken a free trial, go ahead to mytradingIQ.com, click on the purple button, no credit card required. Click on that, fill out the registration page. That's all. So we need pullbacks on everything. Everything's in the red and we need pullbacks on everything. Now, during the break, we were at the end of the morning session. We were filling the gap, and we just filled the gap. Okay, we just filled the gap. So now we'll see what the day is going to hold for us now that the gap has been filled. It ended up being an up day so far. Surprising. Not that surprising, but so we should end up with at least one short trade between these four markets. Should be at least one short trade coming up here, I would think. Mm-hmm. Michael R. Michael R. Do you remember what the heck that column was for? I think it was just to carry those totals down, wasn't it? So it should be that times the number of contracts. Well, that divided by 10 times the number of contracts. It should be that number times the number of contracts. Is that right? Maybe that number is the right number. That is the right number. That's what it should be. For sure. I think I had deleted this column. Yeah, I had deleted that column. Okay, so I don't know why I started carrying it down again, but this should be that. There. Okay. Never mind. I feel better. I deleted it on the last year's sheet at the end because it wasn't correct and it wasn't valid. I mean, that one on the right was the one on the left that I just copied it from. I deleted that one out of last year's sheet because it didn't have any useful data in it. And now it's got duplicated data. So I can delete it again. All right. Well, it is 13:24. So, it is extra daylight time now. That's good. That's more boat time. Once I put the boat back in the water. All right, we need to get a pullback here. Been waiting for a couple of minutes for this pullback to happen, and it just hasn't happened. The S is pretty close. The other markets just aren't giving it up yet. And we're still negative on the session right now until we get a pullback. All right. Wow. Well, these things are just going and going. It's been like 3 minutes now. We haven't had a pullback yet. Since the last time it touched the BBC, it's been 12 minutes on that one. Not the BBC, but the mid-band. It's been 12 minutes on that one. It's only been a few minutes on this one. But that wasn't a valid trade back there. It's been 11 minutes on that one. And 13 minutes on that one. We're just not getting the pullback. It takes one trade right now. One trade. Still waiting for those pullbacks, but we're running out of time, guys. We just end up running out of time here. Nope, we got a pullback on the ES, but it's not a valid trade. We still haven't got one on the NQ. We still haven't got one on the YM. We still haven't got one on the Russell. This isn't going to be a trade here on the ES. We ran out of time. So we had just those couple of trades, those 3 trades, 1 stop out and 2 that were profitable. And it got us almost back to break even on the session. Minus 300. Okay, so 2 white days in a row. We haven't had that in a while. All right, so that's where we're going to wrap it up, guys. I guess we had those 3 trades. 1 on the ES for a couple of ticks, 1 on the NQ for 14 ticks, and 1 on the Russell, we're minus 25 ticks. So we're minus 300 on this session. We're still averaging $138 per session. And these sessions are only lasting 16 minutes on average. And we're averaging $138 per session in these sessions. Now, if you've not taken a free trial with us, just go see if you have one trade here coming up anywhere.
Maybe the Russell.
Yeah, it's almost there on the Russell. Almost, but the other ones are not giving it up. Would have gone full cycle here on these. We would have had one. But nothing. I think it's gonna. If this closes down, it's gonna pull it out of the overbought. We're not gonna have one there.
Yeah, I think you're right.
So we'll go here. If you haven't taken a free trial, go here to mytradingIQ.com. Click on the purple button. No credit card required. Fill out the registration sheet. All right. That is it. And with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. You are ready.
Yep. Okay. Recap of the morning session.
Today, it took 7 minutes and 2 trades to get to $2,050 with 10 contracts on, or 205 with one.
Good job.
Thank you. Thank you very much.
Okay, guys, we have finished each and every one of the markets in granular fashion. So, if you missed any part at all of today's broadcast, as soon as I sign off here in just a few minutes, go to youtube.com/CFRN and you can watch today's broadcast in its entirety. Just a real quick run through. We did hit the CTA short target. We're now back above last week's lowest weekly trading zone. And that looks like a gap fill to me. Yeah. Right now, you can see what's happening. The step line's about to cross blue and climbing. And we should see a retracement back to the VBC. Now that's support times 2. You got the zone and you got the VBC. Pull back to the VBC holds more often than not, but eventually it does trade through. And as you can see, it held here, here, here. Now we're going to get a retracement and we'll see if that one holds. Dow, again, we hit the short target twice, and now we're battling against last week's lowest weekly zone. That's the gap open from Sunday night. On the Russell, there's the gap. Okay, we haven't filled that gap for sure. But we hit the short target, caught a bounce, hit it again, step line crossed, red and falling turned to blue and climbing, bang, we're back at the VBC. We get above it. You don't quite take out the opening price here. So that sends price back to the VBC. Pull back holds, send us right up to last week to the lowest weekly zone. Remember, when price rallies up to a zone, we expect resistance. When it drops to a zone, we look for support. That's how it's been for over 16 years. In Q, we hit the short target, and we've filled the gap, but now we got the black step line crossing blue and climbing, so we're going to get a retracement here, most likely, back to the VBC. Then it becomes a question of, does the pullback hold? This one held, and coming from the other direction, this one and this one and this one and this one and this one held until it didn't. We expect it to hold, just like when price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance until proven otherwise. And as we wrapped up Friday afternoon, we were hugging this zone right here. Now, the new zones came out this morning, so any alerts that go out the rest of the week, including today, will all be based on this week's weekly trading zones. And you'll see this week's zones on my charts. tomorrow. Crude oil, we already discussed, took out $100, but now we're back below. And this would be the gap close right down here. If we close the gap, we could potentially see the short target. Gold, this was the open last night. And by the second 30-minute candle, we had hit the short target, traded below it. I encourage you, go look left, see why. Okay, support sends us to resistance at the zone. Back to support at the BBC. Then we get a leg. And here we just start oscillating below and above and below and above the BBC. Not the best trading conditions. We're right at the BBC. We do have blue and climbing. The underside of the short target can serve as good resistance. If we get through that, then we got right here 51.25, and then 51, we'll call it 31. Then the high of this candle, 51.40 and a half. The high of this candle, 51.41.7, and then the zone 45/46. And silver, here's where we opened last night. And by 7:30 we had dropped to the short target. Dropped a little below it. Go look left, see why. Okay. Buyers came in. We consolidated at the BBC. We got a leg and a retracement, pullback held. But blue and climbing got directly above price, and when that happens, it becomes potential resistance because it's usually on its way to becoming red and falling. But the pullback held, and we came real close to that long target. This high right here was 85.43 half. This high from Friday was 85.33 half. 85.33 half. 85.43 half. Remember, it only takes 2 pennies in silver to get you gold for the day. So, should we take out this high, then it's just a quick hop, skip and a jump to the long target, and then the zone at 86.16/17. And again, on tomorrow's broadcast, you'll see this week's zones. Okay, so we're well off the low of the session, but we're now well off the high of the session. At the beginning of the broadcast, we were basically at the high of the session. Well, that's changed. Remember, I mentioned the real test will be as we move into the close. Are the institutional traders? They showed a lot of buying commitment, taking us all the way up to here. But as we approach the close, are they willing to carry home those open long positions? And I went into great detail why this is such a bearish looking chart. Okay. And I covered all the things that price needs to do to put us back into a bullish stance. Right here, this candle on Friday opened and closed below the BBC. 13 days below or touching. And then came Friday, where we did not touch it. And again today. So, as I've explained, this is what a transition looks like. Am I looking for lower prices, big picture? Well, first we got to resolve this double bottom from November 21st to March 9th. Double bottom in place. Okay. Now keep in mind, these were different contracts. We're on the H contract now. We were on the Z contract back here. But important prices and important areas don't care what contract you're on. If we break the double bottom, the 24% fib retracement should give us a decent bounce. But I don't know that it'll be enough to get us back above the daily BBC. Only time will tell. To become a member, email Valerie, support@cfrn.net. She'll send you an email that explains everything it means to become a member. She'll explain how to get signed up and become a bona fide passport holder. And if you have any questions, she'll be happy to answer them for you. Again, just give her an email, support@cfrn.net. So let's wrap it up with our good word for today. Show your appreciation. Philippians 1:3. I thank my God every time I remember you. Paul takes one entire chapter in the book of Romans to name the people who helped him and to express his appreciation for them. Showing that you care about people beyond what they can do for you lets them know you truly care about them. Since praise can energize others and cause them to spring up like wilted flowers that have just been watered. Oh, the dividends that a husband or a wife or anyone else would reap from expressing appreciation for the little things. Just in case your gratitude muscle has grown weak and you take most kindness and efforts for granted, read the following list of tasks and responsibilities that you should show appreciation for. Cleaning the house, preparing meals, paying the bills, going to work, spending wisely, buying groceries, washing and folding the clothes, bathing the kids, taking out the rubbish, filling the car with gas, being on time, watering the grass, sending out Christmas and special occasion cards, selecting family birthday presents, supporting your career, being accountable, listening. The list could go on and on. Yet, all of those things that I just mentioned, whoever does them in your household, we often take them and their actions for granted. Why not set a goal of appreciating at least one thing per day for a particular person in your life? If you're a man, don't be so insecure that you fear you will appear weak if you start to notice the little things. It takes a real man to look beyond his needs and recognize the efforts of another. When you are secure in your own identity, you're able to give people more power by keeping them informed, trusting them, caring about them, and appreciating them. That's our good word for the day and for the new week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.